What is free margin? A free margin in Forex is the amount of money in a trading account that a trader can use to open new positions. You can calculate free margin using this formula. Keep in mind that equity is the account balance plus or minus any profits or losses from open positions. For example, let's assume that you opened the position with $15,000 in your account, 1 to 100 leverage, and 2% margin. If you decide to buy one lot of euro to US dollar at 1.30000, then the trading amount will be $130,000. The required margin for this position is calculated as follows. If the price of euro to US dollar fell to 1.29050 after you open your position, then you will suffer a loss of 0.0095 pips, which equals to $1,235. In this case, your free margin would be $11,165. Stay tuned for more educational videos from CGFX. CGFX, trade your way to success.